Hey everybody, welcome to SumItUp. Today is our video number 3 on business types, and we're going to be talking about S-Corps. So, Tad, who should use an S-Corp?
So an S corporation is perfect for businesses that are growing, especially businesses that are going to net. When I say net, again, revenues minus all of your expenses, when that exceeds $20,000, an S corporation is a great option. It's really important too for those that have employees, and most importantly, it's going to provide the opportunity for you to save taxes by now paying you as the owner.
Awesome. So we also need to know that it is a full-time business at this point again. And so we're going to go and talk about my fictional company called Jordan Tours.
And yes, he's got a little bit of a twinkle in his eye. He loves this business idea.
So we are killing it now. We are estimated at about $60,000 in net income this year.
Wow, nice.
I've had to expand. I've had to get more machines, get more employees. My only worry now is I think I'm going to have to start paying out taxes.
That's for sure, which is a good thing and a bad thing. I want people to make money and pay taxes, but at the same time, you don't want to pay unnecessary taxes. So the S corporation is a wonderful way for people to save money on self-employment tax. That's one of the ways that when you start paying you as the owner, you're going to be able to save that tax.
So I have to pay myself a payroll then with taxes taken out, correct?
Right. So those of you that either have a sole proprietor or have set up an LLC in the past and have not been paying yourself as the owner, that's going to be one of the biggest changes, is you have to start paying you as the owner, but you have to pay yourself a reasonable salary, right?
Yeah. And so what else do I need to do to call myself an S-Corp?
Right. So it's really easy if you've already set up an LLC. For those of you that are set up as a sole proprietor, you're going to have to set yourself up either as an S corporation or get that LLC set up first before you make that election. And the election to be treated as an S corp is as simple as filing Form 2553. So we've included a picture of that form on this video. The one thing I would say about the form, it looks really, really simple when you first look at it, but I would say and highly recommend that you have your accountant help you fill it out. If you go through and you don't put every box exactly as it should be, if you miss a date, if you forget to sign it in a certain place, then when you try to make that election, the IRS will reject it.
They'll decline it.
I've seen that happen a lot, where you get a notice back from the IRS after you've sent that form in, and the IRS has rejected that.
So how much do I need to pay myself at this point?
So
Payroll.
So once you've made that election, that's the million-dollar question, is you want to pay yourself enough for it to be considered reasonable. And I say reasonable because that's what the IRS uses. They say you have to pay a reasonable salary, and I always say it depends. It depends on the income that you're going to have. It depends on the industry that you do business in, and it depends on you as the owner. How much time do you spend? You know, if you're only a part-time, if you work 10 hours a week, then you can pay a different salary than if you're working 40 hours a week.
So also, Jordan Tours is now kind of taking over my life. I've been considering getting a partner on just to lower my burden a little bit.
Right, okay. So, and that's very common. You want to share the workload, and I will warn you that with you being a single member LLC, so when you set it up and there's one owner, you right now are a single member LLC. The moment that you invite another member in, another owner, you become a multi-member LLC. Okay. And at that point, that's when you're forced to be treated either as an S corporation or a partnership. Okay? And so it is a lot more complicated when you add new owners, because in the past, you as the owner, if you needed money, you just drawn it out of the company,
right?
Yeah. Transferred it to your personal bank account.
Yep.
you can't do that anymore. So one of the things with an S-Corp, and we'll talk to this a little bit more in detail in future videos, is when you have two owners, you're gonna have to make sure that you pull money out at the same time. So we'll cover that in a little more detail when we talk about S-corporations with multi-members.
All right, so to sum it up, when switching your company over to an S-Corp, generally you wanna be $20,000 in net income or above. Your business is continuing to grow. You need to figure out what is going to be your reasonable wage or payroll, and you need to make sure and file Form 2553.
That was easy.
The moment you file that form, you're going to be treated as an S-Corp. That is the number one thing, is filing that Form 2553 correctly. So again, consult with your advisor when you do that. So I want you to stay tuned. We're going to be covering partnerships and S-corporations with multiple members, and we look forward to having you with us then.
Thanks for watching SumItUp. Remember, it's all in the details.